So today's agenda for the webinar: who is a connected person, what type of payments are covered under this head, then how to apply transfer pricing methods for connected person payments, and external database category wise, like TP category wise. Then we will discuss one of the examples relating to TP practical examples. So who is a connected person? So if you refer articles 35 of the corporate tax law relating to transfer pricing, it specifically says about any associated person according to a specific degree of association. So what exactly the specific degree of association? In case of a natural person, whether it is for first degree to fourth degree, up to first degree to fourth degree, it is treated as a specific association with the natural person. And in case of a companies, it is relating to ownership, control, and management. So we'll discuss one by one what exactly that area. While going through the natural person and relating to entity, we'll discuss what exactly the specific associated enterprises or specific associated person. So connected person for UAE TP purposes, for example, an owner of the taxable person. So owner means either it's any natural person to the establishment taxable person. So any owner of the taxable person in any natural person who is directly owns the interest in the other taxable person or control or whatever the situation. So either as an individual, control the entity or any other relationship, then it is treated as a connected person. Article 36 2b, it says about any director or officer of a taxable person. It is not says about director or officer whether it is a shareholder. It is clearly, it says a director or officer. So even if you have a two shareholders and there is a director, then it will come as a director or officer of the taxable person. That will be treated as a connected person. So shareholders separately, director or officer of a taxable person, it will be separate. Then third category, it is relating to related party of any person referred to in paragraph A and B. That means the paragraph first, 1 and B, whatever the related party, that person, whoever may be there, that means the owner or director related to any of these owners or directors will be treated as a connected person. Fourth category, it is relating to partner in an unincorporated partnership. So whoever may be a partner in an unincorporated partnership, that people will be treated as a connected person. So we have discussed about the connected person individual wise. So it will be either a partner or owner, then director or officer, either director or officer shareholder or not a shareholder. Independent party also treated as a connected person for the purpose of a CT, including partners in an unincorporated partnership, then CFO level, that means related to CFO or related party of any of others. Then this is the executive director. Executive director in the sense related to owners or directors or officer of the fourth degree of kinship or affiliation. So whatever they are related to, even if it is like a niece has joined in your company as one of the related party of the shareholder, then still that person will be treated as a connected person for the purpose of CT. Even if his designation, it is just like an employee or just like an accountant or just like an HR manager, still that person is treated as a connected person. So whatever the relationship in the natural person, then whatever the relationship it is coming, whether it is a first degree of generation or second degree of generation or fourth degree of generation, all team will be treated as a part of connected person for the purpose of corporate tax in UAE. What are the payments or benefits, whether it is taxable or deductible, how it is treated? So whatever the payment or benefit, whether it is related to business purpose, that means it is incurred only and exclusively for the purpose of the taxpayer's business, then it is 100%, it is allowed as deduction. Otherwise, it is no. But again, it is correspondence with the market value. And this assumption is not applicable for a listed entity and a taxable person subject to a regulatory authority. That means it's regulated by ADGM or something like that, that listed companies. In that case, that will not be applicable because they have their own rules and regulations relating to managerial remuneration. And any other person determined by the decision of the cabinets. So in case of, for example, school fees or partners, house rent, etc., are debited in your P&L, then it is not treated as a business purpose. It is not used for exclusively, not used for business purpose. In that case, so expenses, that expenses will be a part of payment to the connected person. You have to add back those payments and see that whether how much the payment has been given to the connected person. Now, let's see what are the payments. So one is relating to salary, bonus, or employment, whether paid directly or through share plan. So if you are giving a director, then if you are giving a salary plus some of the share plans, then that will also treated as a payment to the connected person. So it has given a broad activity. It's not like it's straight away not to the salary alone. Whatever the payment you are given to the director or owners or shareholders or any connected person, then it is treated as a part of a payment to connected person. Then second category, employer contribution to private pension fund. Third category, interest or loans. Fourth category, it is relating to accommodation, education, and other benefit, either as a payment or in-kind contribution. Then fourth category, other payment and allowance are directly related to employee. So if you take in a payment, whatever the payment, you have to categorize it by payment wise. For example, interest on loan, that will be a separate TP transaction. If you are taking a salary related expense, you have to combine. That means, for example, salary, then bonus, then leave salary, gratuity, everything will be combined and show that how much amount has been paid to those connected persons. It is not like that, for example, gratuity has been given to the shareholder or director, then it is like if your total salary has been taken, then that amount also you have to include into understand that how much payment has been given to those connected persons. So whatever the payment, but that payment must be within the different category, within the group. For example, interest on loan, that will be separate, then salary related part, that is separate. For example, commission related payments, that will be separate. So each transaction wise, TP related transaction, each transaction wise you have to categorize, but some of the transactions, subhead like for example, relating to salary, leave salary, then gratuity, then private pension fund, those things will be added back together to the salary. Then you have to find out how much is the amount paid to the connected person. Then who is related parties for the purpose of individual? So we have a two category. One is relating to individual and second one is relating to entities. So first party is relating to individual. So individual, it is like a fourth degree of kinship by birth, marriage, adoption, or guardianship. So what exactly the fourth degree of kinship? So first degree of kinship means a natural person's parents, children, and their spouses. Second degree of kinship means a natural person, grandparent, grandchildren, and the sibling and their spouse. And the third degree means a natural person, great grandparents, great grandchildren, uncles, aunts, nieces, nephews, and their spouses. Fourth degree means natural person, great grandparents, great grandchildren, grand uncle, grand aunt, grandniece, grandnephew, and first cousin and their spouses. That means it's all category it has included, including the adopted child. So this is the fourth degree of kinship for the purpose of a natural person. In case of a trustee or founder, in that case, a trustee, founder, or settler, beneficiary of the trustee or founder or settler, who may be the related party of that trust, those persons will be treated as a related party for the purpose of TP. And in case of entities, common control entities, then who are maybe involved into that entity ownership, then those people will be involved. In case of unincorporated entities, the partners in the unincorporated entity. Unincorporated entity means the entity is not having a trade license, but they have a memorandum of understanding between the so-and-so job is be carried out. So that memorandum of understanding, within that memorandum of understanding, if you are working, then it is treated as unincorporated entities. Even though you don't have any entity, legal entity type, trade license is not there, but they have operating based on the memorandum of understanding. So that basis, that entity is called unincorporated entities. In that case, the partners in an unincorporated entities are treated as an individual, then again it is treated as a natural person. Then exempt and non-exempt business activities for the same person, or maybe doing the same activity, then whatever the activities we have mentioned about the each area wise, those people will be treated as a connected person. Next one, in case of a related parties and entities. So what is a related parties and entities? A related parties are relating to entities. So one is relating to parent company, second one is relating to subsidiary company, and the third one is relating to branch of PE. That means a permanent establishment. So first condition, it is relating to one juridical person alone or together with its related party directly or indirectly owns 50% of its shareholding. That means 50% of a shareholding. That means major category, it is the shareholding structure. So if it is more than 50%, then it is treated as a related party entities, that is either subsidiary or parent company. Second category, it is relating to control. That means one juridical person alone or together with its related parties directly or indirectly control the other juridical person. So there is a term, it is used to control. So the first part, it is purely relating to the shareholding structure, and if you see the second part, it is purely relating to control. So control will be based on different category that we will discuss in the next slide, exactly what is the control. And the natural person or related party together or controlled directly or indirectly more than 50% of shareholding, then also it is treated as a related parties. So if you see the article 34 to 36, they are relating to transfer pricing, relating to the corporate tax. In that, it is specifically says about these are the related parties. So if you see the OECD regulation, there is a specific clause mentioned about the associated enterprises. So associated enterprises specifically mentioned about Article 9 of the OECD Model Tax Convention. In that OECD Model Tax Convention and our TP, if we will consider, and if there is any difference between these terms treatment, then always international treaty will be prevail. That means that this UAE treaty will not be in place. International treaty will be placed because there is an international agreement for avoidance of double taxation. That means a DTA agreement is already there with the UAE with a lot of countries. So associated enterprises, as per the OECD guidelines, it is specifically says about the parent and subsidiary companies and companies under common control. But there are some criteria for how to decide the control in that company. So if there is a difference between the UAE TP and the international TP, then international TP will prevail. That is the law, it specifically says in the corporate tax. Then what exactly the control? We have discussed it previously, it is like associated enterprises and a TP relating to entity. There is a clause relating to control. One part it is relating to the shareholding structure and the second part is relating to control. So what exactly the control? So control in the sense, it is like a 50% or more voting rights, to exercise 50% or more voting rights, and the second category it is relating to 50% or more board of directors, and the third category it is a 50% of profit to receive 50% of profit. So all three category it is like even though the control it is says the previous two slides before we have clearly mentioned that one is ownership, that is means 50%, and second part control. But if you come to the control area, the three category, one is a voting right, the second one is a board of directors, and third one is a profit distribution. It is clearly says that 50%. And fourth one to determine the significant influence. That in law itself, they are not specifically mentioned what exactly significant influence. So board of directors means a 50% of voting right in any other person, and the second category, board of directors and voting rights. So both the category 50% or more. And example of a connected person under UAE CT law, we will just look at what exactly, how it is coming. For example, Mr. Ali, majority of the shareholder in a company X, that Mr. Ali is holding 60% of shareholding in a company X, and company Y, 30% owned by company X. So first is a company X. It is a 60% shareholder by Mr. Ali. Second part is a company X is owned by 30% in a company Y. and Mrs. Ali is a CEO of in a company Y. In that situation, how you will analyze the connected person for the purpose of seeking? So if you look at the first angle, Mr. Ali is majority of the shareholder of company X. So he is considered as a connected person for the purpose of company X. And second one, Mr. Ali and Mrs. Ali are considered related party as per UAE CT law because their relatives are within the fourth degree of kinship. That means a natural person. In this one, it's a first degree of kinship. So automatically it is a connected person for company X. Then Mrs. Ali qualifies as a connected person to company X because they are related party to Mr. Ali, majority of the shareholder companies. So if you see the second part, first part it is saying because of the shareholding structure. Second part it is saying because it's a natural person. Mr. Ali and Mrs. Ali are considered related parties, relatives within the fourth degree of kinship. So it is based on the relationship. And if you see the third category, Mrs. Ali qualifies as a connected person to company X. Mrs. Ali qualifies connected person to company X because Mr. Ali is a majority shareholder of company X. Mr. Ali qualifies as a connected person to company Y. So here, Mrs. Ali and here Mr. Ali qualifies as a connected person to company Y because they are related party of Mrs. Ali, CEO of the company. So in a company, in a practical scenario, husband is a shareholder and wife is working in the company as an employee, then it is automatically it is treated as a connected person for the purpose of the law. And even if not only the same company, even if the wife is working in another company related to this company, then automatically it is a connected person. Both the angle, whether it is for the company X or whether it is for the company Y, both the angle, it is a connected person for the purpose of transfer pricing. What are the complaints relating to transfer pricing? So the TP complaints and everything we have already covered in the previous webinar session. You can go through that webinars and in detail how the TP process. We have covered almost 3 webinar sessions for the transfer pricing itself. Then you can go through that one. So complaints part, if you see the main complaints, one is relating to what are the objectives relating to this TP complaints. You have to understand that what are the objectives, what are the parties involved in this one, what are the related parties, and what are the connected person involved in this transaction. Then you have to see that what are the general TP disclosure form is required, what is a master file is required, then local file required, then country by country reporting. So you have to understand whether this company, whether you have to prepare for a master file, local file, or country by country reporting. But there is a safe harbor rule also. There is a threshold limit. Based on that threshold limit, you have to declare whether they have to prepare all these documentation. So complaints relating to local. So it is a master file, then local file, and a CBCR. So master file, it is like a MNE group with a consolidated revenue of 3.15 billion, that is equal to euros 150 million, or where the revenue of a taxable person exceed AED 200,000. So if it is not an MNE company, if the revenue of the total taxable person is exceed 200 million, then automatically TP will be applicable. You have to prepare master file for that one. Or MNE company straight away 3.15 billion or 750 euro. So if you see the latest domestic minimum top-up tax, that is means a global pillar 2 block rules, in that 15% of tax is imposed on MNE's companies. So in that case also 750 million euros in the previous 2 years out of the 4 physical years. So that is the safe harbor rule relating to domestic minimum top-up tax. So the same domestic minimum top-up tax, what is the revenue it's coming? This similar one, it is applicable for MNE's companies, not only for the MNE company. And the rest of the companies, if it is exceeded 200 million, then automatically you have to prepare for the local file and master file. And the same it is for a CBCR, it is the same level. And what is the relating to complaints relating to connected person? So connected person, we have discussed about the natural person. So connected person means wherever the aggregate payment or benefit exceed 500,000 per connected person. So whatever the payment made to any of the connected person exceeding 500,000, then you have to follow with the complaints above 500,000. So if you see that a connected person transfer pricing, the first law, draft has been issued, the main issue. In that one, you can see that they have not mentioned each connected person. In the first one, it is says that aggregate 500,000. Then after that one, it's revised and it clearly mentioned that 500,000 per connected person. So that is the change happened after that one. So if you thoroughly refer the wordings of the connected person, then you will get an idea that after this second revision, it has changed to above 500,000 per connected person. And second category, payment or benefit exceed 500,000 per connected person together with its RP, together with its related party, or per connected person exceeds the 500,000, then automatically complaints you have to follow. Then that we will discuss in details relating to what exactly the complaints. So what are example like, for example, salary, bonus, commission, interest, rent, accommodation, then pension fund contribution, education. So whatever the payment you are giving to any of the connected person, then automatically this will be come into the picture. What exactly the transfer pricing documentation you have to follow? So timeline for transfer pricing disclosure, it is within the 9 months from the end of the financial year tax period. So list of the category for RP disclosure, one is relating to goods, service, intellectual property, interest, assets, liability, others. So one is relating to related party areas, then other one is relating to connected person. So in case of a related party, whatever the transaction with the related party exceeds the 40 million, then automatically this will be triggered. And any transaction aggregate, any transaction to be disclosed, if the aggregate value of a transaction per category, that means if you are giving for a related party loan and per category it is exceeds 4 million, then you have to disclose those things. But in case of a dividend declared between a related party, not included in the above. So it's other than dividends, whatever the transaction between the related party, related companies, then one it is aggregate with the 40 millions during the year, or single transaction 4 million and above you have to report. In case of a connected person, so it's a separate schedule, you have to fill each connected person with aggregate payment or benefit exceeds 500,000. That means that together with its RP or aggregate 500,000, if it is exceeds, then you have to fill the form and you have to disclose what basis you are valued. So we'll see exactly what is the information you have to submit in the tax return. So CT filing connected person. So what are the information it is required? So one is relating to connected person's name, then TIN or TRN, then benefit or payment, then description, amount of benefit or payment from the taxpayers to CP, market value of the service provided by CP, and a tax adjustment. So benefit of payment, that will be a drop-down list. Then you can select which benefit you are giving, either as a salary or other as a commission or bonus or whatever the benefit that will be, and a discussion then, and details relating to payment given to connected person and a service received by a connected person. That discussion, what exactly what you are giving, what type of services you are given, that information you have to mention either as a managerial remuneration or it as a percentage of commission. So whatever the base you have to clearly mention about in the discussion board. And the third one, it is related to amount or benefit or payment from the taxpayer to connected person. So either as a connected person, right, individual payment, not individual connected person. So that means each individual payments you have to show, not with the not individual connected person. So you have to give a detailed breakup, like these are the payments made to connected person. That means it's whatever the information they are asking, it's a detailed. It's not like a summary of the information. And market value or benefit or service provided, whatever the amount is paid to some other than connected person, right, the amount of payment and whether it is within the market value, then you have to mention market value in the sense you have to adopt the transfer pricing method, then you have to disclose those things. Then difference between any tax adjustment, then that will be automatically calculated, difference between what are the amount you are given, then what is the market value of that one, then difference will be the tax adjustment. So for example, 500,000 is the 600,000 is the amount given the taxpayer, and market value it is a 500,000, that 100,000 will be the tax adjustment. That will automatically taken to the tax calculation purpose. So this one, this slide we have already discussed in the webinar series, but just for a recap, these are the transfer pricing methods we have adopted. One is the 5 methods are there. One is a traditional transaction method. Second one is a relating to transactional profit methods. So traditional transaction method is one is relating to cup methods, resale price method, cost plus method, and transactional profit margin, transfer profit, then PSM, that profit split method, transactional net margin methods. So these are the 5 methods adopted for transfer pricing. So contract cup method, it's relating to interest, royalty, licensing fee, purchase, sale, goods, provision of services, wherever cross comparable are available. So even if you are managerial remuneration, if you are doing, then you must have a cross comparable. It's available with adjustment, whatever the adjustment you can do. But if cup method it is possible, you can do it with the cup method. Resale price method, trading operation, buy and sale without any value addition. Sale of semi-finished products, then transfer of intangible. So PSM, it is a purely for intangible, highly integrated business operation, and manufacturing operation. Manufacturing operation, it is for transaction net margin method. That means TNMM. So in that basis, calculated. So these are the 5 methods for transfer pricing. In case you are adopting one more method other than this one, FTA will allow, but you have to give a detailed discussion relating to that method. Why you have chosen that method other than this OECD prescribed method? Then you have to give a detailed explanation with a proof and how that method has been adopted and what are the standards used for those methods. So all information must be there to support this one if you are taking other than these 5 methods. So now look at what are the benchmarking for managerial remuneration. We have discussed about the managerial remuneration, then connected person and everything. Then what are the benchmarking for managerial remuneration? So one is the external published data. One part is external published data and the second part is internal published data. Internal published means internal information. So external published data. What are the external published data? One is relating to external market data. That means a lot of publication will be there. Based on the publication, you will get an industry standard. So this person's salary will be compared with the industry standard. Similar industry at a similar location, or the number of employees in that industry and that the other industry. That means independent industry is the same. So all category you have to think about it. Then you have to compare with those entities. Then that basis. That means the external market data. Second option, it is like industry analysis. There are a lot of reports has been issued, a research report. Then based on the research report, you can get the information relating to, for example, auto market industry or banking industry. You will get a lot of reports. Based on that reports, you can do a industry analysis. And the third one, it is relating to, for example, HR consultancy firm, independent certification, like HR consultancy used to issue that salary range for the different category of the job discussion. These are the salary range, oral, GCC level, this is the salary range. Then UE level, this is the salary range. Like that, the consultancy firm, global consultancy firm used to issue their report. Based on that, one of the external published data. And another one is relating to appropriate reference documentation, any documentation or anything from any authority. So those documentation you can use for the purpose of external published data. Then now we'll look at what are the benchmarking used for external database. So we are discussing about the external database, the first category. So it says about the external published data. So what are the benchmarking used for external published database? So database for different category, for example, benchmarking for tangible goods, service, and intangibles. So one is Orbis, it's a Moody's one. If you look at Orbis, now it is name has been changed to Moody's, and one of the most comprehensive database for private and public companies. So you can get the information from financial database relating to comparable companies. So you are comparing one company with another company, you can look at with Moody's global level. And European level, it is like emirates, that one focuses European companies, purely on European companies. And third level, it is relating to North America, Compustat, S&P Capital IQ, a detailed financial for mainly public companies in North America. And S&P Capital IQ covers financial data and equity research industry analysis. And Bloomberg Global, it's provide a real-time and historical financial data. Then Moody's again, then specialized in listed companies global. So why we are talking about all North America, or it is North America, global, EU, why we are talking about all these database? Because if you are a MNC company and you have a company branch or PE or any other place, if your company is situated in UAE, then you have to compare the European, for example, it will be one of the main companies situated in Europe, then you have to compare with that European company with your PE. Otherwise, the data, whatever you are taking, it's not a correct level. Similarly, the other location, then you can see the local global level. So these are the database available for tangible goods, service, and intangible. Now we'll move to intangible assets. Intangible asset licensing and royalty benchmarking. It is a purely royalty range is the royalty range. Then second one is a royalty stat. So royalty range offers a licensing agreement and data and royalty rates. Then royalty stat, it's a provider royalty rate data for licensing agreement. Then KT Mine, it is specialized in IP, including patents and licensing agreement. Then Lexis, then that will provide access to licensing agreement and royalty data. So the royalty agreement, royalty stat, then royalty range also there is a combined database for including CUP method, TNM method, CPM method, all method having a including intangible plus tangible assets are there. So each database having a different functionality. So you have to select based on the what area you are going. On that basis, you have to select the database. Now we look at loan and financial transaction. So intercompany loans and financial transaction, for that purpose, the database, external database is a deal scan. That means a Refinitiv loan connector that provides details relating to loan transaction worldwide. Then Bloomberg loan data that covers interest rate, debt issuance, and credit transactions. And Thomson Reuters Econ, then that will offers financial market data, including debt pricing. So these are the intercompany loans and financing transactions. So if you have an intercompany loans and a financing transaction, then you have to look at these deal scan or Thomson Reuters or Bloomberg data, loan data, in order to get an interest rate, whether it is within the market rate. It is not like just like a Google search and doing the information. You have to get a proper database from the authorities. That means it's a different database. Then commodity prices and database, there is a S&P Platts that will give a pricing for energy, metal, and agriculture commodities. And Thomson Reuters, it's Econ that will give commodity trend price. Then metal bulletin, it will give specialized in metal and mining prices. So this is the benchmarking for raw materials and commodities. So we have discussed about the tangible, intangible. Then this is relating to TP for raw materials and commodities. So you can look at this database to get the information relating to related company, independent companies. So you are comparing with a related party with another independent company, then you can use one of the materials. So you have to see that which category of the TP you are analyzing. That's why first itself you have to think about that which area. Then you have to select the database applicable for that category. Next is relating to customs violation and transfer pricing alignment. There is a UN comrade that United Nations trade data for goods. Then there is a WTO database, the World Trade Organization, that covers the trade statistics relating to WTO. That is then TIPS, that one is used for trade and tariff analysis. So this is a relating custom and trade related database for used for custom violation or transfer pricing. So it's basically relating to the trend you can get. Then what are the trade data relating to the goods, then trade analysis and tariff areas. So all these database can be used. And a database for the service industry in UAE. So one is relating to Orbis or Orbis TP, that is Moody Analytics. So then it is, for example, commonly used for TNM, and UAE and GCC used for professional services, technology, and logistic related entities. Then emirates focus on European private and public companies that we have already discussed, then useful for database for MNC companies with the branches and operations in UAE. So if your MNC company is located in one of the European countries, then you can use this database in order to check the cross-border transaction between the European country and involved within the UAE. Then Capital IQ, S&P, then for the purpose of providing wealth information on a public and private companies globally, including UAE, it is useful for finance, consulting, and tech service sectors in the region. Then Refinitiv relating to Middle East news, Savaya, Middle East news relating to companies like banking, consulting, and real estate. This is basically a financial information, not entirely the database, but you will get a financial information relating to those industries. Then Thomson Reuters, it's relating to financial and legal services. You will get a detailed financial information in the service sectors in the Middle East. It's a TP analysis, it's a good options. And the Gulf base, it's a provider financial and business data on GCC listed companies. So Gulf base, you will get a GCC listed companies, including UAE, beneficial for trade service industry companies in the region. So it is like a listed company. So you will get the database from the Gulf base. Then local source it in the sense of Dubai Chamber of Commerce, then Abu Dhabi Chamber of Commerce for industry report that useful for transfer pricing analysis. This is not only the one of the database, because of this information you will get a trend. What is the market trend relating to those industries? So those information you will get. So we have already discussed about the external database. And now we look at what is internal database available. That means internal information. So what you have to do, you have to compare your service agreement and whether you are providing a similar service agreement with some other person. That means compare the remuneration of the similar service agreement with other person, whether you are employed at a similar level. Then you can compare with the internal information. In that purpose, you have to see the characteristics of the services, whether we can use for a cup method or whether you can use the RSM method. Why we are saying a cup or RSM method? Because, for example, if a marketing manager or marketing director is involved in this one, then his salary will be based on the number of sales or how much a sales target, and the general manager will be different. So each area wise, what's the characteristics of that one? Then you have to filters based on the qualitative or quantitative filters you have to use. Then you use the internal information. Then you have to compare what is the internal information relating to that person's salary. You can compare, and you can compare with the external. So you can use internal cup method and external cup method and compare both the cup methods. So so you will get an idea whether it is within the range. And you have to see the timesheet, hourly rate, and requirement for timesheet. Why this timesheet is important? Because, for example, you have two companies. One company is a main company, and second company is a related party. And how much time is involved the second company? Then you have to see the time allocated for that entity. So you must have a proper information relating to those things. Then only you can develop the internal cup or internal information relating to benchmarking for managerial remuneration. Now let us look at what are the key factors before doing a benchmarking for managerial remuneration. So one is relating to company's performance, that profitability and revenue growth. So higher the compensation, that means a director's salary should be reflect company's financial health. So if a company is profitable, higher compensation may be appropriate. And lower compensation, a struggling company may need to adjust their salary accordingly because of the lower compensation. So whatever the percentage I have mentioned, 60%, 1%, 45%, this is not the standard. Just for a reference purpose, simply I put, it's not like a standard. It's for a reference purpose only. And for example, revenue growth, strong revenue growth justifies a higher salary by demonstrating that company is expanding and generating more income, or they are expanding in a different location, and all these things. So One area it is related to key factors. One area it is relating to company's performance. So profitability and the revenue is one important factors for fixing the managerial remuneration. Second part is relating to industry standard. So what are the standards? That means a market comparison. So it is important to compare salary of what director in a similar company in the industry are earning. That means you have to see the competitiveness and competitive industry, independent industry, and what is the salary given to the similar industry. For example, if you are taking an automotive industry, then you have to select automotive industry in the independent company. So you have to see that number of revenue generated in both the company, whether within that range, or number of employees in both the company within that range. Then only you can compare the salary part relating to that one. So this is a market comparison. You have to compare with the market comparison. And the second one is a benchmarking. Salary should be benchmarked against the companies of similar size, industry, and location to avoid overpaying or underpaying. So you have to compare with the similar company, size, industry. If it is, if you are not having a similar company in the local, then you can compare with the international company. But while comparing with the international company, the location area, you have to do an adjustment relating to those location area. Then you arrive at an adjusted remuneration part. Then that will be the industry standard. So one is a market comparison. Second one is a benchmarking of your salary. Third criteria, it is relating to director's experience and expertise. That means a previous success in a similar role can also be a factor of setting up the compensation. Then a director with more experience, industry knowledge, and specialized skills will typically command a higher salary. So that means depending upon their experience, then director's salary will be high or low. So that basis, this is one of the key criteria for deciding managerial remuneration. Another factor is affecting managerial remuneration company size. So revenue. So for example, directors in a large or more complex organization with a broader responsibility will be get more salaries. And compare with the other one, larger companies with more revenue or employees generally pay higher salary due to that larger operation. Then and the other entities like employees with the similar. So even here also I have given 100K employees and 10K employees. This is just for an example purpose. So one is relating to complex organization. Second one is relating to simpler organization. You have to compare with the simpler organization. What is the range it is coming? Then you have to compare those entities instead of comparing with the multi-level entities. What it means a company size. So while doing the comparison, you have to see the revenue, then employees count, then organization structure, whether the organization structure is a complex organization structure or simple organization structure. So while taking a simple organization structure, you got it. Then next level, it is the number of employees relating to that organization. Then the levels of the employees. So which levels are there? Then first level, second level, third level. That we will discuss in the later slides. Then next consideration relating to board decision and corporate governance. That means, for example, in case of external shareholders approval, that means a shareholders consideration you have to get. For example, in case of public listed companies, shareholders might need to approve the director's salary. In that case, you have to get external shareholders approval. In case of a board of directors, salary must be agreed upon company's board of directors. Director's salary must be agreed with the board of directors. Then company and its board. So it's depending upon your organization structure, whether it is in a public listed companies or the private limited listed companies. Then what are the board of directors involved? How many members are involved? Then all this criteria is one deciding factor for the managerial remuneration. Then legal and tax consideration. This is relating to comply with the local labor laws, tax regulation, corporate governance standard. Then tax efficiency, you have to see that whether the given structuring of salary must be minimize the tax liability for both the company and the director. So at present, it's there is no tax on director's salary. But so this is for a general one. So if it is like at present minimize the tax liability, basically it's for the company's angle for UAE purpose as of now. Then seventh part, it is relating to incentives and bonuses. Like many director salaries are complemented by bonus or incentives based on the company performance. Then there are long-term relationship, then long-term success stories. All these things are a part of a deciding factor for the manager remuneration, how much manager remuneration you can fix it. Then equity or stock option. So in that case, some of the directors, they will receive equity compensation as a part of their package to encourage long-term value creation. That means an employee has been working for more than 10 years. Then there is an option like equity option they are giving. Then that's also a part of a deciding factor for manager remuneration. So all this information you have to consider while deciding how much salary has been given. Even equity option we have discussed in the previous slide clearly mentioned that what are the salary along with the stock option. So that stock option, it is coming here. Then non-monetary benefit like whatever the perks and benefits such as the health insurance or retirement plans, company cars or allowances that need to include in the total compensation package. Then flexible working balances, it is relating to additional time off or whatever the overall compensation, high level executive. Then risk and responsibility. The level of risk and responsibility by the director is taking, for example, high risk ventures may be higher salary due to additional risk involved. Like that, depending upon the risk, then you have to decide the salary factor relating to those employees. Now we look at a TP example, managerial remuneration. So if you see the category, we can decide we can broadly categorize into primary partners, experienced partners, and senior partners. So in case of a big company, large firm, you can see the three levels of primary, then experience, and senior partners. Three levels will be there. But in case of a small company, maybe a primary partner or only an experienced partner. So depending upon the company-wise, depending upon the size, then the levels, partners level will be. Partner means anybody. It is like a director or managing director or vice president or CFO, whatever the level. The structure will be changed based on the responsibility. So one is a seniority, responsibility, then competence and contribution, and the second part is a remuneration part. So it will be like a senior level, it will be salary will be high. So that is one criteria. It's not based on the number of tenure they are working. Then second part is relating to primary partner owners responsibility. So it is like 50% of revenue related, followed by strategic firm development or project management work. So senior partners involved in the project management work. Then based on that basis, you have to categorize. So once you have analyzed that this entity having three levels of partners, then you have to bifurcate that. So who is a primary partner, who is an experienced partner, who is a senior partner. The next level, we have to see that what is a partner job matching category. That means description. For example, key result. For example, if you're taking a primary partner, development of firms, brand reputation is involved, and experienced partners, the role it has been changed to they are responsible, and the senior partner it's a responsible. And the strategic leadership and direction of the firm. It is if you see the primary partner just involved, and the second experienced partners, it is a responsible, and the senior partner, it is a responsible. And if you see the business relationship, then project direction, then major business relationship, then strategy business relationship. Then if you see leadership services, possibly part of the national or regional, he is involved in either national or regional, then experienced partner involved in national or regional, and senior partner regional or global. So you see the activity and the responsibility changed from the regional to global. And if you see the progression area, career position and sales revenue, then managed revenue, utilization of billable hours. So if you see primary and experience, there is a differences. Then similarly, senior partners level. So required to generate revenue equivalent to several multiple of on cost. And if you see the senior level, they have a lot of responsibility. So this is just like a discussion of the roles and responsibility. Based on the roles and responsibility, you have to bifurcate that each partner level. What are the roles? If you are doing only the marketing related, including the sales related, or you are only handling the finance related operation, then that will be a separate category, or you are checking overall responsibility, that may be a senior partner level. So on that basis, that means the roles and responsibility you have to bifurcate with the partner level into 3 categories. Then next level is a criteria, it's a revenue. Revenue related criteria you have to bifurcate. One is a common title. So for example, primary partner is a director level, partner level, junior partner or vice president. Experienced partner, it is like a managing director, managing partner, sales, a senior director or senior partner or senior vice president. Then senior partner level, managing director, managing partner, senior director, senior partner, senior vice president. Then functional or industry wise. So if you see the primary partner, it is the member of industry of practice. Experienced partner, senior member of the industry or practice may lead in industry practice. Then senior partner, often either a rainmaker, that means he is taking the major decision-making part, rainmaker, and the leader of a major industry practice. Then geographical, if you see the primary partner, office country-wise. Then experienced partner, country and regional for smaller firms, possibly global. And senior partner, country, region, global. And revenue-wise, it's less than 4 million, 3 to 8 million, then more than 6 million. See, whatever the standard here it is, says it's not exactly the standard. You have to categorize based on the revenue. Then you have to see that whether it is on within the primary level or secondary experience level or senior level. Then you have to categorize separately. So then you will get how much time is involved for each role wise. So we have discussed about the role category. Then second part, you have to discuss about the revenue category, how the entire revenue has been bifurcated between each partner level. Then you see how much the utilization, span of control of consultants, like less than 20, then less than 30, then more than 25. So the business manager, so how much business is managed. Primary partner is less than 8 million, then experienced partners is less than 12 million, then senior partner is more than 10 million. So based on that criteria, you have to bifurcate. Then you have to see that how the category wise, how it is fixed. Next level, it is relating to professional skills and qualification. You have to see that what are the qualification relating to each partner wise. So for example, primary partner is a master's degree, possibly PhD. Then negotiation and conflict resolution, he is a skilled one. Board level management is a business and commercial abilities. Subject and service level industry expertise, it's a national recognized as a reference source. Then creative thinking, he is a leader. Ethical and professional standard, embodiment of firm's standards. So similarly, if you see the experienced partner, you can see master's degree, highly skilled. Come to the senior partner is eminently skilled. Then business and commercial abilities. And if you see this area, subject service line, industry expertise, internationally recognized expert. So it's a senior partner level, it is all expert level. Next one is relating to client relationship. You can see clients, it's a first part, it is a key strategic clients. Then second part, experienced partner, it is coming key strategic clients. Third one, it is key strategic clients of higher importance. So basically the final stage, it is coming that major area, significant area, whatever it is. New clients, like a significant new clients acquisition. So senior partners involved in the big clients related acquisition, but the primary partner will be possibly a new client. It's not based on the revenue or not based on the significance of the acquisition. So depending upon the category, you have to, again, you bifurcate based on the professional skills, then client relationship. So client relationship is important. So if you are managing, if it is managing the major clients, or you are interacting with the major category of the consultancy, even a consultancy part also, it's an important thing. So you are dealing with the major clients, all these things you have to see and analyze. Then you have to bifurcate with the partner wise. Now we have discussed how the category, then how the each roles wise, like either it's based on the risk and responsibility, or it is based on the qualification, or it is how you are maintaining the clients. All this we have discussed. Now let us look at what is a director's salary, then how the appropriate transfer pricing method you have to adopt for a director's salaries. So what are the methods used for a director's salary? Which method you can apply? So one is relating to cup method. So for a cup method means if you can compare with a director in a similar companies, then you can use for a cup method, not related parties. So if you are comparing with a related party, it is not, you cannot use a cup method. But other than not related companies, not a related company, that means independent companies, what are the similar level, then you can use the cup method. For example, suppose you have a company based in UAE and you want to set a salary for a director of a subsidiary in another country. So you would research data of a similar companies in the same industry. So here it is a research data, similar companies in the same industry, country, and compare the director salary paid in those independent companies. So for example, director company A, it's a 250K, and company B, it's a 275. Location, company A, it is in UAE, company B, it is in a different region and country. So while using a cup, you have to adjust a director's salary to match similar position in comparable independent companies, considering factors, size, complexity, and geographical location, because the company B is situated in a different country. So you have to see that you have to adjust the salary based on this adjustment you have to do. Then you will get whatever the adjusted salary. Then that method, that cup method, you can be used if the salary is without having any other adjustment. That means the salary is a fixed percentage. It is giving like a 50K per month. If you are giving like that, then you can compare with the independent company in the similar size, considering the factors size, complexity, and geographical location. This is just for a reference purpose. What are the 5 methods? We are just putting a reference purpose to understand how the manager remuneration has to be evaluated. Second category is relating to cost plus method. Example, this is a director's compensation is treated as a part of service contract between related parties. You add a markup to the cost of the director's services. So markup you are adding. So for example, work in a both parent company and subsidiary company. If a director was both in parent company and subsidiary company, you may calculate cost associated with the director's employment. That means salary, benefit, and related administrative cost, and then add appropriate markup for the value services provided. So whatever the value you are given to the other entity, then you have to mark up on that method. For example, director salary cost is a 200,000, markup you are fixed like a 10%, then salary will be 200,000 plus 10% markup. So you have to understand how the structure, how the entity is working between the related party. Then you have to fix the contract. So then how much time is involved in that? So whether your price is inclusive of markup, whether your price is contributing, your cost is contributing to the markup of that product, then you can do a markup, 10% markup to that category. Then resale price method. So resale price method is a direct service directly affecting pricing of the company product. It focuses on the service where percentage of sale price of the product. For example, your salary part is director is responsible for marketing and pricing strategy of company's product. For example, marketing director. So he is actively involved in marketing part plus the pricing. It is based on the product. So in that case, you have to determine appropriate salary based on a share of profit generated by those products. For example, sale of product is a 10 million and the cost of sale is a 4 million and the gross profit is 6 million. So that is salary fits like a 5% of gross profit. Then you can straight away you can use the resale price method. So we have discussed about the 5 methods. So you can use any method, but you have to understand that what method you want to use it depending upon how your salary is fixed. Based on the contract or fixed contract, then only you can select this method you can use. Not like simply you put a resale price method, I'll use a resale price method or I'll use a cup method. It is not possible, but you have to understand that which method you want to use. What is the function provided by that manager or that managing director or CFO level who are maybe involved, or connected, whatever the connected person involved in that services. You have to see that what area he is involved. Based on that area, you have to fix the which method you have to select. Then in this case, data salary is a 6 million into 5% markup. It's a 300,000. Then profit split method. In this profit split method is applied a situation where direct salary is tied up to profitability of the company. In case the profitability of the company, it's direct salary. So it's basically it is a case of a joint venture or shared business model. In that case, direct salary is based on the profitability. Then automatically that model we can use profit split method. So director may be entitled percentage of profit. For instance, a director salary could be fixed percentage of company's overall profit, similar to profit sharing, overall profit arrangement. In that case, that will be the major criteria. For example, company profit is 1 million, 5% of overall profit as a direct salary. So this is the criteria fixed for a profit split method. So salary will be 50,000. Then transactional net margin method. So this method is a net profit margin earned by the company in relation to its cost, assets, or sales, with the net profit margin earned by comparable independent entities. So you are comparing your net profit margin earned in cost or asset, and you are comparing with the independent entity. And what is the independent entity? What is the rate adopted? Then that basis you are comparing, and you have to do some adjustment relating to that one. Then you will get a net transaction margin method. So it is like, for example, if a director is heavily involved in managing operational efficiency and profitability, you might compare company's net profit margin to that of other companies in the same industry to determine fair salary. So let's say, for example, net profit margin is 12%, but net profit of comparable companies, it's only 10%. Then you have to do direct salaries is to adjust in line with the comparable companies. So comparable companies, it's only 10%, and your net profit margin is at 12%. Then you have to reduce that much adjustment. Then you will get the market value of the salaries. So you have understood what are the method we are used, what are the TP method adopted, then how the TP method plays, then what are the criteria to evaluate the manager. So if you have any, if you want to review your benchmarking study relating to managerial remuneration or any other RP or connected person, you can send your mail to our mail ID, rbs@rbsaccounting.com and info@rbsaccounting.com. And wants to learn more about your CT, we have recently, it's 2-3 days back, we have recently uploaded a course in Udemy, and it is a UAE corporate tax law and know your CT return by March 2025. It's we have updated up to March 2025 with 13 total hours and 41 lectures related to entire CT. So if you are interested, if you want to subscribe, then you will get a full list relating to the CT study. So we have, for this webinar itself, we have created a separate coupon code. So RBS promo April 2025. Then if you use that promo code, and you will get a 50% discount relating to this one. It is very, very minimal. So why we are putting in a Udemy educational technology platform. It is based in NASDAQ based company, US. And in that platform, you can live. You can take the classes, then you can, whenever you are free, then you can attend those classes. Then it is a all recorded version, and you can see whenever you are free, then you can complete. We have almost 5 modules. One is relating to module A. We are discussing about overview of UAE corporate tax and domestic top-up tax. Domestic minimum top-up tax. Then second part is relating to free zone tax and impact. Then what are the schedules applicable for free zone tax returns. Then module C, it is relating to over to a transfer pricing area. With the transfer pricing, it's like 9 lectures. Then module D, it is relating to tax group and a set of carry forward of losses. It's a 4 lectures, one of 5 minutes. Then module E, it is relating to know your CT return filing. Then other miscellaneous topics like tax assessment, then freeze on tax return, how to file, then main tax return, how to file, and what are the election, then what is a different base of election, what exactly election based application, because once there are 5 to 6 elections are there. If you are taking some of the election on a wrong basis, then you cannot change the entire lifetime of the company. So the election related things we have discussed. So this course is just like a 13 hours on demand video, one practice test. So after doing all these things, after completing each module, we have created five quizzes to check your understanding. Then at the end, there is a final test. It's having almost 15 questions, and pass percentage, it's 75%. Then once you are passed, then you will get a certificate of completion from Udemy. It is Udemy, you will get an online certificate, and 31 downloadable, whatever the presentation, including today's presentation, you can download from the portal itself. So 31 downloadable resources, and either you can access your mobile or TV, and this once you enroll, you will get a full-time access. Not only it is just not for a time period, it is a full-time access, and anytime you can access this portal in Udemy.